Good morning, good afternoon, good evening, and I hope you had a wonderful weekend. Welcome to the BitLab Academy daily live stream every day, Monday through Friday, 10:30 a.m. Eastern Standard Time. My name's Kelly Kellam. Welcome to the show. We try to bridge that gap from beginner to pro. Whether you are a beginner or you are a pro, I guarantee you will learn something here in the BitLab Academy daily live stream. I just want to shout out everybody. I hope everybody's doing well. Please go ahead and give me a thumbs up. Give me one of your favorite emoji or a combination of emojis. Let me know how you're feeling. Let me know how you're doing. Let me know if the mic's working okay. Just want to make sure. I just had to reset the studio. And so I just want to make sure it's all good before we get this going. I had a wonderful weekend. We had Super Bowl. And it was an absolutely wonderful game. Some would argue that the refs, called that game at the very end, but that's not us that's not up to us to debate. So if you're an Eagles fan, I'm sorry. If you're a KC fan, hallelujah to you. So welcome everybody. I hope everything's doing good. I hope all systems go here. So again, my name's Kelly Kellam. Please hit that like button, hit that subscribe button, ding that bell. It's the easiest, fastest, and just free way for you to help support this channel, all this content that we bring to you and the team here at BitLab Academy, putting together so much incredible stuff so we can really get the information out of not just talking about what's going on in the charts, but actually breaking down what's going on in the charts, as well as sort of tying some lessons into this and breaking down some of the thoughts and considerations as to why certain things are called out, or even sometimes bridging it all the way back to what is support and resistance, or how to use a Fibonacci, or understanding what's going on with the dollar index or the Chinese bond market, and how that ties into you dominating the crypto markets with your investments and trade decisions. So please, again, my name's Kelly Kellam. You can find me there at Kelly Kellam on Twitter and all my socials. Please make sure that you head over to bitlabacademy.com. Check that out. We have so many incredible updates that are coming in a very, very, very short period of time. By the end of this month, we're working very hard to get. There's going to be lessons continually filmed for the next, probably 2 years. But we've got a huge amount. More than is currently in BitLab. All new courses, all new content, more than's already in there is going to be rolled over, updated into the new BitLab Academy. We've got a new website, we've got a new flow, there's new offerings that go along with this. And with all this, of course, the price will be going up a little bit. So if you get in now, if you become a member at BitLab Academy now, before those updates happen, you will essentially be grandfathered in for life, meaning you will keep the current pricing before it goes up. For the lifetime of your membership to BitLab Academy. So shout out to everybody. Shout out whether you're watching here on BitLab Academy daily stream on the BitLab Academy YouTube, or if you're watching over at the Hit Network YouTube, shout out. Make sure you follow all those socials. I'm going to go ahead and throw it to my screen. I just want to make sure, because there's so many scammers out there, and y'all know I just got a $30,000 scam from me last week. We are going to BitLab Academy. Make sure you're following this at Academy BitLab. And of course, mine is, let's go to the top here. Mine is at Kelly Kellam, as you can see right here. We're gonna be going over a lot of stuff today. And then of course, last thing I'll say before we get into it, make sure you sign up for this, the email here on BitLab Academy. You're going to be part of the newsletter. You'll get the newsletter. You also get updates before anybody else about what's happening. Also, discounts and different offerings. And you're going to be entered to win one free month of the course access, as well as indicators. And in addition to all this, one of the things that I'm going to do, if you sign up for this newsletter, I really want to encourage you to do so, because I want to make this I want to make this an open community as much as possible, while it also pays to be a part of our inner circle. So the newsletter is called the BitLab Academy Insiders Club, and as such, with these free daily live streams, sometimes it's a bit of a challenge to satiate everybody and give everybody exactly what they want. But if you are a part of our community, if you're part of that Insiders Club, each week I'm going to be including, as a part of that, at the bottom of each newsletter, a chance to vote on some of the content that will come the following week. That'll be some of the altcoins we do coverage on, some of the charts that we want to do. So get in there, join the BitLab Academy newsletter, be entered to win, and also be part of that Insiders Club where you can have early access to a lot of stuff, as well as help vote and shape what's some of the content that's going to be here on the channel. And in addition to all that, we've got these some really incredible indicators that we put together. So all you need to do is come over here to BitLab Academy, come over here to indicators, and you can get involved with these. I mean, these you'll see me covering them a lot when I'm doing TA, as well as other indicators and such. But right now, if you do come here to if you trying to pick this up, then there is currently a coupon code called relaunch 15 in the cart checkout area. If you go in there and put in relaunch 15, you'll get 15% off, whether it be the courses or the indicators or both. If you get 15% off your first month. So, how's everybody doing? How you feeling? Shout out to everybody in chat. Looks like we got Alexandra G, Matt C, Dr. Death. I love the name. Karen Swigart Harris, Nicholas Rito. We got Crimson Caravan Company, Brad Guidell. So many familiar names. This is like a great family we're building here. Newark JK, King Peasant, Jason Rohde, Scott Rod, first one that was in the chat today. So shout out to everybody here. I hope you're all doing well. Let me know, were you placing friendly wagers with some friends on what was happening with the game this weekend? Did you watch it? Did you not watch it? We had a phenomenal time. We actually had a super bottle. We had no bottles for me. I had only water. But we had a Super Bowl party here at the Hit Network at BitBoy Studios, BitLab Academy Studios. This is a fairly large warehouse, build a studio space that, we've sectioned this off to a bunch of different studios. So mine's down here. They put me in the basement, baby, because I'm always running hot, so they can keep me chilly. But upstairs, there's a big open showroom, because this used to be like an ATV showroom warehouse distributor spot. So upstairs, moved some desks, put some couches out, had a giant projector up on the wall, watched the game. There's about 25 of us here, friends, family, even my cousin Matt, who's in town. He's also online business kind of guy. Him and a couple friends, and some of the other staff colleagues here brought in their kids, and we watched the game together. We had probably about 30 pizzas and barbecue and so much stuff. So really good time. Alrighty, but that's all I gotta say about that. We gotta be friendly here to share our life a little bit. It can't just only be charts and numbers and math and what's going on, but we gotta dive into what's going on and talk about some of the opportunity that we could see from some of the data that's available that I think is being a little bit overlooked and not being utilized by the masses, and that's okay. You all here are in the BitLab community. I'm going to show you some of this data that can be a wonderful leading indicator about where a market's going. Especially, I have one indicator that's very helps a lot with seeing where the markets are going. Or it can signal likely movement in the market to the upside or downside, or sustaining that on a more midterm, smaller time frame. And then another macro signal that I think everybody should be watching so they can understand where the liquidity in the market is. And why is this important? Well, liquidity in the market, essentially, think of it like fuel. Liquidity is dollars, or I don't want to say dollars. Liquidity is any when currency is coming into an asset. So, for instance, if you have $1,000 in your bank account, then you have $1,000 worth of easily accessible liquidity. If you have $1,000, if you move that into stable coins on exchange, then you have $1,000 worth of identifiably on the blockchain liquidity available to move into whatever assets and to whatever assets that you're looking to go into, whether it's traditional assets like the NASDAQ or Dow Jones or tech stocks or whatever it is. It's liquidity that's able to go into the market. Now, based on what happens with some key major assets out there or index of assets, you can sort of get a wonderful estimation, a wonderful judgment, an informed judgment based on data, which is everything you want when you're investing, when you're trading. You want to look at things based on the data, not on the speculative price where that's going. And some of the data that we've got here can really foreshadow some things to come. So let's go ahead and jump into this. Again, if you have not, go ahead, make sure you check out BitLab Academy because this whole site's going to change very soon. We have a whole brand new, I'm so excited to share all this. So let's go ahead and jump into the chart and to all the things. So here we go. So of course, everybody talks about the Dixie, the dollar index. Well, this is one of the very important metrics that we want to look at, but we have to look at this in the context of the broader market and also in the context of what's happening on the geopolitical side of things, where we're at within the Bitcoin halving cycle, meaning the 4-year cycle, every three years, 10 months, when those mining rewards get halved, which is essentially, if you're not aware, that's what the halving cycle is. And that's why there's such a direct relationship between the 4-year cycle, meaning we have this parabolic bull run that starts before the halving and right at the halving, that's when it really accelerates. We get the parabola, it breaks down, and then following that, then we have, about a year and a half of downturns, basically bearish trend, that then, we have some accumulation, and then eventually we have a shakeout, all the capitulation, all this stuff. When you look at this over time, we can see, actually, I'm going to pull up a chart from the Rational Root. I didn't think to pull this up earlier, but he's got a really wonderful chart that really exemplifies it. And this is right here. This is the 4-year cycle as compared to the halving process. So each one of these lines here, 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 these are 3 halvings. And what do you notice? About 69% of the way, just shy of 70% of the way, we could see that that's essentially near or at where the bottom or the start of the slow trickle up begins. Right here, 69% from the halving, this is of the full time that is between halvings. That's what this measurement, this near 70% is. And this was just about where we had some, obviously breakdown, a descending triangle. And then we have a capitulation event and some accumulation. And then right about when the bulls start to go towards the gate to break free is about 70%. Same thing again. We're at that point now. Will it play out the same way? Will it not? Well, we need to look at a variety of data to point this out. And that we can see this. Halving, bull run. Halving, bull run. Well, the next halving is not until about somewhere between April, let's call it April 2024, because it could be as early as late March, could be as late as May, because it's not on a fixed date that it happens. It happens every 210,000 blocks, and there's a block every roughly, not exactly, but roughly every 10 minutes. So we have that translates to about 3 years and 10 months. But so people just call it the 4-year cycle, and so. Does this mean that we're going to go absolutely parabolic from here? Probably not. If we look at the scope of how things go here, and back here in 2012, 2013, we did get a parabolic run up, but this was also the first halving, so that had a massive impact on the markets, and also, okay, this is actually happening. We can understand. Why is this important? Because we can understand the supply dynamics of this asset, where every other asset on the world, no other asset in the world has these dynamics where it's a fixed supply deflation over time. Now, of course, there's still considered inflation within Bitcoin because of the mining rewards, but over time, this is decreasing substantially by half every 4 years. In addition to people becoming much more mature in the markets and moving assets off of exchange into long-term holder wallets, holding through volatility, and this has been increasing especially over the last 3 or 4 years. So we're seeing a lot of maturity come to the market. So coming back to here. Coming back onto Twitter and if you haven't followed the Rational Root, you should absolutely follow. I'm gonna press him to come on here and be a guest here on the BitLab Academy daily streams here, and hopefully also have him do a masterclass inside of BitLab Academy itself. So you definitely get in BitLab Academy because we're going to be doing some cool things. But what I want to talk about here is we're going to move this forward. We talked about the Dixie, the dollar index, having this relationship as we've seen over time, and I pulled up charts to show you that when the dollar is strengthening, when the value of the dollar is going up as it's weighed against a basket of other world currencies, it signals that money's coming out of assets that are being held, especially risk assets, which Bitcoin and crypto, the crypto ecosystem is considered risk asset. And then further down you go on that market cap rankings. And what do I mean by market cap? When we look at the rankings, this rank isn't of people's favorites. I guess you could call it that in a way, because you can tell how much liquidity is within each one of these assets. So this is a rank of how much liquidity, how much money is in each one of these crypto assets. So what we want to do is look at that relationship between the dollar in the world currencies, and that's when you see the Dixie going up or the Dixie going down, when you have this this notion of risk, this notion of risk on, or this notion of risk off. And we can see right here that we've been in this descending parallel channel, and as this has descended from November to where we're at here, look at this relationship. As soon as this sort of rolled over and started coming down, that is as soon as the Dixie started pushing up is when we started breaking down on Bitcoin. And similarly, we have not clearly broken this trend yet. When if the Dixie, if the dollar index were to find a rejection here and continue to the downside, this could be fuel for Bitcoin having a breakout continued, as it says. But as we look at this, this is in a descending parallel channel, but it's right at this resistance. And if there is weakness here, and this breaks down, then we have more of a narrative of the understanding of the psychology of the market, that there's likely going to be risk coming back into the market, meaning people have an appetite to invest and trade in risky things. At the same time, this very well could break out to the upside. So we want to watch this. We want to watch this relationship between the dollar. If you're looking on TradingView, it's the DXY, the dollar index. You can also just search dollar index when you're looking through the various charts. But we want to look at this in context. So this is not the main signal I wanted to show you today. This is just a little bit of an appetizer. So coming over here, I do want this sort of paints a broader context of what's something we need to be aware of. Experience shows that commentators tend to downplay the signals given by the yield curve. In fact, when asked a question in 2007, which was just preceding the 2008 crash, the housing market crash, the 2000, which just preceded another economic downturn, and 1990, which was a major economic downturn. And on earlier occasions, most economists indicated that this time is different, meaning that this time the yield curve inversion will not be followed by a recession. Yet, a recession occurred every time. And so there's a lot of arguments out there currently that as bullish as Bitcoin is setting up in terms of where we're at on that timeline, that 4-year cycle, there's a lot. We still have to look at the context, the broader context of what's happening globally, geopolitically, geoeconomically, and understand that there's everything's kind of sitting. It's kind of like when you're watching cartoons, when you see the car sitting on the edge, pulls up right to the edge of the cliff, and it's sitting there. And if you move at all, you could be shifting your weight to the front. And because there's not conviction, there's not a weight that's balancing on the other side, you very well could fall off a cliff. Similarly, you could, if you are near the front and you're moving towards the back, then you're putting weight towards the back, giving you more stability on the edge of that cliff. So everything right now in the markets is kind of teetering on that sort of questionable narrative, because economists, that's why this argument's coming in right now. They can't, there's no real clarity as to why the markets even had, other than relief, why the markets had this bullish impulse, and not just Bitcoin, but traditional markets as well. When we have this massive bearish pressure that is just weighing across the world on markets, and every data point that you look at in terms of if a recession is coming or not, and a recession, if we have that sort of come in, that's a risk off sort of narrative that would come into play. So there's smart money is kind of walking on eggshells. They're kind of putting their chips there and then seeing if that appetite is there, and if it's not, it's coming on. And there's data that can kind of show us some of that stuff. So we're going to come over here and look at this. This is the Dixie, the U.S. dollar currency index, looked more broadly and we are right back on the, there we are, looking more broadly. And we can see this is all of 2022. We had this uptrend. And what did we have in Bitcoin all of 2022? Downtrend. So as soon as this rolled over, which we already saw, we saw this triple top right here. And this is not quite a triple top because we have lower highs each time. So this is a very bearish topping pattern because this very clearly rolled over. We rolled over, got a lower high, followed by a consecutive lower high. And so in this context, looking at this, right about where this is November is when Bitcoin started to have those bullish divergences forming, over the period of a few weeks leading up to that. And now in all of 2023, we're getting a lot of bullishness in Bitcoin. But what we want to see right here, and this is interesting, we have this breakdown where this rolled over. And not only did this roll over, but we broke this macro trend line, this uptrend line support of the Dixie. And this is potentially very bullish for risk on assets because we broke down and we came back up into the support. And we're looking for either a rejection here to confirm a continued downtrend on the Dixie, which would be helping sustain a likely uptrend on risk assets like Bitcoin and crypto. But we are at a line that very well this could reverse and come back up to the upside. And one of the things that we can relate this to, and I do this in every stream, so I'm going to do it again. I gotta make sure I'm repetitive on the things that really matter, and it is this chart right here. We want to make sure that this is essentially what happened. So we broke the line of support, which is this line of support, boom. And now what's happening is it's coming back to test the narrative between the bulls and the bears. Every single candle is a representation of the session of the time frame you're looking at on a chart, whether it's a weekly time frame, a daily time frame, a 4-hour time frame. So if you're looking at a weekly chart, every candlestick on that chart is a representation of 1 week. Now, what we're doing when we're trying to understand the price action and when something breaks through this means that the bears are dominating the psychology of the narrative right here. And then they take some profits because they're not sure, not entirely sure. The bulls come in at a key level and then they try to push it to the upside. And then this is why this is so important for confirmation, because either the bulls push it up here and the majority take profits because they do believe it's going to be a downtrend, and then the bearish narrative takes over and then really gives a dominant aspect to the market narrative. If you do break previous support, have a relief, and then have a continuation to the downside, then you have a trend that is formed and it's confirmed in that direction. And so then the narrative is going to be dominated by that said direction. In this case, it would be the bears. And when we look over here, and we want a bearish Dixie in relationship to risk assets. Now, moving forward, here's some of the key metrics I wanted to share with you that wonderful analyst TechDev has identified. And that is the USD value, which is simply a reflection of global liquidity. And we can see this. I can't bring it up. I can't bring it large because I can actually show you on a better chart where I can bring it large. So we can see Bitcoin here on these massive uptrends is very heavily related to the China 10-year treasury bond. And this relationship here is the CN 10-year, the Dixie, and the high yield OA spread. Sorry, I can't speak. Somebody just peeked their head in the door. And we can see this relationship when we have this large uptrend. It's a relationship when this spread is going to the upside, which is very heavily tied to what's happening with the Chinese treasury. And when it flips over, we've seen that there is a direct relationship as to where Bitcoin's price action's going. As this goes up, look at this bottom. It's roughly right about where the bottom had formed, and now the bullish narrative is starting to take over. Same thing right here. We have this massive dip. This was March of 2020. Actually, this is early 2021. So that was before that. And we can see this massive dip here on this pullback. And then when we have this massive uptrend, we can also see this related right here. And then similarly with the tops. Now, we've had the same thing. And what I want you to notice is this has sort of act as a leading indicator as to where the broader risk markets are going. And so we also have, in addition to that, to not just the 10-year, Chinese 10-year, but we can also look at the 3-week MACD coil, which is basically, this is the MACD looking at the 3-week chart. And we can see this flip over has occurred as well on this moving average. So we've got a lot of things lining up that are suggesting that we could be preparing for a large bull run. But I have to give you the cautionary sort of message there, is that the markets may have a bullish impulse to the upside. That doesn't mean you just go all in and forget about it. I mean, very well. I mean, it's up. You have to make your own decisions, and you need to take in the data and then formulate what your thesis and what your action plan is. And if you're going to go, I don't want to say all in, but if you're going in and just holding and you have a 10-year time horizon, more power to you. We are absolutely in an accumulation zone. But when we're looking at the next, let's say, 18 months, it's very likely that we could get a strong bullish push that, you know, even up to the 47K range, you know, just below the macro golden pocket, which is a Fibonacci retrace level, and get rejected and then come back down. And why do I say this? Well, when we look at, if we zoom this out, this is from the newsletter. I broke some things down there. Let's go to another chart so you can see. Here we go. This. I'm going to hide that. So if we come over here to the 3-day, go to auto, we can see this was the December 2018 into July of 2019, massive bullish impulse that got rejected, that then post halving, mind you, this was before the halving, post halving, then we had our massive uptrend. Okay. So we need to be aware that the markets are still going to shake about and do everything they can to shake out the weak hands. Why do they want to shake out the weak hands? Because if they shake out the weak hands, that means that they're causing selling pressure in the market. And if they're causing selling pressure and forcing people to capitulate, then that means they're driving the price down. And if they're driving the price down, then that means they can get their hands on cheaper Bitcoin. So the way the retail looks at it is, damn, the price is falling. And the way smart money looks at it is, damn, the price has fallen. Let's get it. Let's get in on it. So that's what we need to, that's a narrative we need to understand when we're looking at this. Now, what's the sentiment right now as to, you guys can let me know in chat. Do you feel like our bullish impulse that we've had, and I'll go ahead and pull this up on the chart. Do you feel, that's not what I wanted. Do you feel like this bullish impulse that we had is, I'm going to delete this Fibonacci, delete a Fibonacci. Do you feel like this bullish impulse that we had is exhausted? Do you think that we're doing the bullish narrative of having this confirmation that I was calling for the last week and a half, this roll over to come down here and test this level? It's amazing that it's doing what the TA and the charts say, right? Push up here to this golden pocket, get rejected right at the golden pocket, and we're pushing down to these levels, which is previous price actions, resistance, support, and now we're having a little bit of a pause here. Okay, now we're on the 3-day, so let's come down to the 12 hours, get a little more clarity. We bounced off this, but this wasn't a bounce like a bounce to the upside. This was just like a heavy ball. This is a heavy ball. Like, if you think about it like this, if you drop a bowling ball, it will bounce, but the bounce will be so minimal you don't even think of it as a bounce, because you drop it and it might have, a 2 centimeter bounce, right? Now, if you drop a tennis ball, it will bounce rather highly. Well, why is that? Because the momentum and the kinetic energy from a bowling ball, which has a lot of mass, when it drops, the bounce is not necessarily super measurable just from your awareness of looking at it. Same thing happens when you have bearishness come into the market, and the narrative is dominated by bearishness especially from smart money traders, large liquidity providers of the space, people with big money, and a lot of different people with big money. When they think that this needs to have a pullback, and we still need to bring the boat back so we can get those low prices, we get up to these levels, which are key levels, this golden pocket, as we can see right here, and people start taking profits. It gets forced to roll over, and as it rolls over to the downside, then not only were the smart money sort of signaling this, but now, and everybody's bullish. And then as it rolls over, then once we get about here, not here, once we get about right here, when it's in free fall, that's when the majority of retail says, oh my God, I'm scared. And they trade out of fear, and they trade out, meaning they capitulate, they get out, or they sell short when we're already in the middle of a move. Now, the question is going to be at these levels, the question is, other than TA, was there any signals that was signaling a likely drop? And then similarly down here, is there signals that this could go to the upside or the downside from here when we're at these key levels? Now, we're currently at 21,570, 580. Now, I want you to notice something that I noticed the other day looking around, and this is another on-chain site that I found that they actually have some really, really great stuff, very affordable. This is not a paid thing at all. I don't have a relationship with them in that capacity. I just think it was pretty great. And they have this long-term holder net position change chart, and I want you to notice something. When you have the green on the upside, that's coins coming onto exchange. When you have the red to the downside, that means coins are being pulled off of exchange. And what I want you to notice, we can kind of zoom in here. What I want you to notice is looking right here, right before this point here, this is coins coming off exchange. Okay, so this is bullish. Why is this? Because when coins are coming off exchange, you're upping the illiquidity of the market. You're taking money, they're taking available tradable asset out of the market, meaning there's less supply to trade. But then right here, look at this. Coming into this move, what happened? Long-term, basically holders, people that aren't just day trading assets, wallets that have been identified as holding, assets on a regular level of over 155 days or more, typically even years. So what we can see here is coming into this move, we can see that assets were coming back onto exchange. And so we can see this because this is happening right as this move starts. And then what happens? Okay, the price, as we saw, has rolled over. Well, let's look at that relationship between holders, smarter money, people that are mature in the space, not thinking that this is a fully affected bullish move. We're going to take some profits because there's no telling with the economic situation of what's happening, the geopolitical, everything, the entire world of confusion in the markets right now. They took profits into the strength of the trend. They took profits on this bullish impulse. So what do we do about that? What do you do about that? When the markets are moving, are you taking profits into the strength of a trend? Now, the question here really shouldn't be that. The question is, what is your time horizon? Meaning, when you put assets in, are you hoping to make money within a week? Are you putting money in because you believe in Bitcoin and crypto, whatever other assets? In this case, let's talk about Bitcoin specifically. Are you putting it in because you believe in the long-term trajectory of this, or are you doing it because you're trying to actively trade? Because if you're trying to actively trade, if you're trying to make money on this on a regular basis, then you need to take a hint. You need to take a clue from what hodlers do. And look at this. You see this mark right here, this huge green candle. Look at this bullish trend we have here. And look how much the hodlers, the more mature people in the space, they put their assets on exchange leading into this strength of this bullish trend. And then what happens right afterwards? Well, clearly those assets, majority of them were offloaded because we see a downtrend in price. And then what happens is as these smarter holders sell, as I've said before, and I break this down in good detail in the BitLab Academy with the on-chain data analysis course, once you get these longer term holders, a hodler mindset, when they take profits out and they take liquidity out of the market, then when they're selling it to somebody that's buying at a top. If somebody's buying at a local top, then that means they're not looking at the data, the majority of them. And so you're having this disproportion of short-term holders, of very easily capitulative, not strong hands. They buy it because it's going up, and the second it starts going down, they're underwater and they sell at a loss. That's what typical retail does. They buy at a high and they sell at a low, versus being a smart, cultured with data and deep analysis. Smarter traders are looking at the data, and they're also waiting for a strong bull trend. They forget about greed because, okay, they're taking profits. Is that greed? No. What greed is when your trade is in profits, and instead of taking profits, you want more. It's the more that steals from you almost every time. Just a little more. If it goes up to, right now, if it goes up to 60,000, I'm going to take profits. You know how many people aren't going to? The majority. Because now they're like, well, it got back to 60. I'm going to take profits at 100. And you know what? I have very high targets in mind. But when I'm trading, when I'm investing, when I'm engaging with this market, I have a diversified portfolio of assets that in cold storage and private keys that are long-term holds that I'll never touch. So when I'm talking about what's happening in the market, there's a couple different narratives that we have to understand. We have to talk about what's that time horizon, what's that risk allocation, there's so much stuff about that, and you need to know what yours is. So I have my long-term stuff there, and I don't need to worry about it. So it's there. I pick my entries and I add to it over time. And when I'm trading, I take some profits off when I trade, and 30% of my profits go into the long-term, that long-term basket. And then 30% of them, actually a little less, right now it's about 20% goes into basically dry powder that I have there sitting there waiting to deploy back into the markets, or if I need to at any time, back into my personal bank account. And then I have 30% that I basically allocate across a variety of different trading wallets for when I'm trading. So I'm looking at this with multiple time frames. But when I'm talking about when we're actively trading this, then we need to look at this data. Where is my screen? Then we need to look at this data and be aware of what our strategy is. Because if we are trading, then we need to, when we have these strong bull markets, we need to take profits into that. And when we see a bullish impulse after a huge downturn, we need to ask a question: should if I entered here, should I take some profits here and wait for a pullback? Absolutely. And this is not financial advice. This is what I, as well as many other people that have made a living doing this. This is how you look at it. You take some risk off the table and wait to find a place that you can reallocate it for those profits to make you more money. Okay. So that's some of the things that I'm thinking about here. And my screen got all messed up. But I'm just going to take a breather for a second. I'm going to see if I can read any of y'all's sort of questions or thoughts, and we can jump in with that. I like this. Crypto Crank said, I don't care if it's successful or not, up, down, or sideways. More volatility, the better. Absolutely, I agree with you. However, that only works to your favor if you have good risk management, which I hope all of you are taking notes, not just from me, from as many people as you can, and define what your strategy is. But the truth is, and I mentioned this, I think last week, some people hate the idea of volatility, but they really want to make money. Well, in order to really make money in an asset in a short period of time, meaning not in just 30 years, but sometime in the next 5 years, then you need an asset that's volatile. Why do you think? Here's a great example of that. Think about Jeff Bezos. Okay, think about how much money he has. Well, Amazon is at a double-digit pullback since their IPO. I think, I don't know if it was 97 or 99, so somewhere around there, somewhere right around 2000. But they've had a double-digit pullback every year since then. And he and his wife and his father and maybe one or two other people, I mean, they made billions and billions of dollars because they held through the volatility. But the key word there was volatility. There was volatility, meaning it was a high growth asset with a very quickly high adoption rate in terms of the use case, because he got in at the right time with retail and online and really offering a wonderful service and growing into that over time. But they didn't sell because there was a little capitulation at 30%. So that high volatility in terms of if you mix high volatility with high adoption and increasing and very quickly growing over time, use case of whatever it is, whether it's Amazon, whether you look at Bitcoin in 2021 versus, if you look at Bitcoin in 2018, 2019, and through 2021, you had a very small but noticeable growth rate of the amount of US dollars transacted across the Bitcoin network. Now you look at and it was growing, but it absolutely went parabolic. I think it was like 17, I don't remember. It was, I think it was like 17, was it 17 trillion? But the next year, 2022, this last year, exponential increase in how much US dollar volume was transacted across the Bitcoin network. It was like 60 trillion, I think, over the course of the whole year. Now, this is while the Bitcoin asset was in a massive bear market just falling the entire year. And we had an exponential increase in use case. That shows conviction in the asset class by the users, by people becoming involved with it and using it to transact, because it's far more affordable than any other traditional banking, traditional finance sort of means. And this is while the price is falling. So you're talking about, I have a whole course and a lesson series within BitLab Academy talking about utilizing fundamental analysis, quantitative fundamental analysis, and qualitative fundamental analysis, looking at the numbers of those use cases, how you can track transaction fees on various different crypto projects, and you can identify, even when price is falling. I mean, that's the key time to be looking at this stuff. When price is falling on any asset, you try to hunt the fundamental data, as well as you're following the technicals, but you're hunting the fundamental data so that you can identify asset prices falling, which, remember, asset price is the speculative value. So it's driven up or down based on the interest and appetite of investors. But the intrinsic value of an asset, the use case, the adoption rate, the growth rate, all these things that we want to look at. If you think about traditional assets, we talk about, quarterly, you get the earnings reports and profit and loss statements, and the balance sheets and all these sorts of things, and you get it quarterly. With crypto, with Bitcoin, and most other crypto assets, especially the large ones, you have on-chain data. So when people say you can't track the values, well, these people are ignorant. You look at the on-chain data. You look at DeFiLlama.com. You look at basically you can look real time. Essentially, it's as close to real time as possible, as fast as blocks process on any crypto you're looking at. You can see what the transaction fees have been over time, how much volume has been transacted on that rail, the adoption rate in terms of the number of wallets. You can even separate that out into individual entities. So if, for instance, let's say this would be awesome. Let's say Coca-Cola got really involved with Bitcoin. They might end up having 10,000 wallets because they have so many different stores. So there's a way to look at on-chain data and separate and aggregate that data down to only identify Coca-Cola as one wallet address. So you can see as close to real unique wallet stuff over time. So you've got so much data available. And so right now, when we're at that sort of impulse, this bullish impulse that could be the start, that could be the start of what's going on in terms of a new bullish wave up to 38 to 50, somewhere in there in 2023, that we have to pay attention to this data, because based on historical charts, it's very likely we will get that impulse to the upside there we go. The impulse to the upside, a rejection, or some sort of pullback, because every market that has a push up needs even right here. You know, we have a attempt for a pullback, and then once you start rolling over, and so what we want to see right here is you see this, we have the golden retrace from this top to the bottom. The golden retrace here, we could reach all the way up to this golden pocket, which is basically about 39,000 up to 42,000. We could get all the way up here and get rejected all the way back down. So we need to pay attention to what's happening here as we enter a bullish trend, as we enter a bullish impulse, and be aware of what's happening. So we can look at some of our charts and see what's going on. And, you know, looking here at the 3-day, it's got all the way up almost to this spider line here, and I'll do a video about spider lines in the future. But this is essentially an extended ray. It's an extended ray of trend. Price action from you know, far way back here, where I'm using price action here as in a fulcrum here on each individual candlesticks, and it gives you this is something you know, I actually learned from CryptoFace. When I saw this, I was like, these things are magic. But we got on the BitLab at the BitLab trading stack, we can see this flag here, which is a bearish divergences, all of this. So there's 4 bearish divergences: momentum, on balance volume, money flow index, and we also had a rolling over sort of candle structure here, a broadening wedge, as we can see here, into a golden pocket. So this was prime level on nearly every metric you could see, that it was a profit-taking zone or opportunity for a small short, because this is going up. We're having this strong bullish impulse, but we had no sort of testing of this support and resistance. We've talked about this a lot, but this was calling it. This is looking at the 3-day. The volatility index also crossed. Look at that. It was leading. This was leading about 2 candles before, about right there. So about 2 candles before we broke down. In addition to that, significant movement showed this was an overheated move from the start. But if we come down here to the, let's come down to the 4-hour. And we're getting a lot of choppiness here. See, we're getting attempts. This is something I want to point out about all indicators, and where we're at in trends. We have established. We can see this EMA ribbon. We've bounced on it. The EMA ribbon started to collapse as the price consolidated sideways. And as price consolidated sideways, we broke through the EMA ribbon, and we also have formed lower highs and lower lows. So we have established that we're entering a downtrend. So when we get these signals, these buy signals, and we're in a downtrend, these are opportunities to buy a relief pump that you need to take profit from on the downtrend. Because what have I've shown you this a number of times. Once you've established that we're rolling over, and I won't even say it here, I'll say once we've established that we're rolling over and we get that lower high, when you get the buy signals on any indicator, whether it's Market Cipher, whether it's a BitLab trading stack, whether it's Lux Algo, anything, even RSI, MACD, this is an opportunity to buy the dip, sell the rip, which is right here. When we come back up, we formed a trend line, and then you basically ride the short down until you get your signals for a buy again. And it's only a small buy because you've established a downtrend. And essentially where we're at right now, we're getting another, this is not necessarily a buy signal. These are all bullish divergences. In this case, we had 2. This was paired kind of with, it started turning blue. We had the extreme out, and we got a bullish div leading right into this, but it's very weak. So what I'd be doing is not even buying these sort of, and by the way, in a downtrend, the buys are taking profits on shorts. So I do want to clarify that. So you're taking a short once you roll over. Once you press back into this, you get this clarification for what's happening here with the candles rolling over. As we could see, We zoom in here, rolling over. We have a bit of like a spinning top, two of them in a row. It's almost a doji and a spinning top, showing indecision coming into the resistance of what's happening, coming into the underside of the EMA ribbon. So you would take a short there, and then ride this down until you get your bullish signals. In this case, I probably would have taken a profit on a short right about somewhere in here, because we get a low print right here on this indicator, as you can see. I don't know if you can see it on there. I'll make it larger. Get a low, and we also have this large green wave. I cannot see, blue wave. So, and then you just take profit, and then let this continue come up into the EMA ribbon, which you start seeing rolling over, which we can see right here with these two candles. Once we break below the close of this candle, then that's your entry for a short, and then you ride this down until you get a clear signal. In this case, we have a RSI, a bullish RSI divergence, as well as a stochastic divergence. We have the extremist sticking to the out right here. So I'd kind of like to see a bullish divergence here on the hidden volume. But I would be taking some profits, which I have on a short position, because we're starting to see, not only that, we're here at a price action level of support, as we can see denoted by this band right here, which is a lot of resistance and then support, and we're finding support. So looking at these things contextually. So, excuse me, too much coffee this morning, man. All right, so let's look at a couple others. Let's look at a couple others. Let's see if you guys threw any coins here. Let me know what coins you're looking at right now. We got 11. It's 11:20. I want to spend some time going over some different charts and see how we can look at these in context of what's going on. All right. Let's see. Don't trip by the dip. Okay. We're going to go ahead and look at, I saw, do algo. Let's check out what's going on in algo, and we'll look at Matic. All right. So, man, I love the BitLab market intelligence, because it's so, it gives such a nice signal as what's happening with pressure coming into the market or out of the market. And that's just the market intelligence, seeing, multiple divs on tops or bottoms, given support for a move. And then, of course, we have the hidden volume, we have relative extrema, and we have significant movement. All these together give you a very clear picture with, combining everything from RSI to stochastics to money flow to on-balance volume, hidden volume, divergences of 9 different indicators. Email. I mean, really, if you guys haven't yet, check out this over at bitlabacademy.com/indicators. And again, right now you can use relaunch 15 for 15% off on the indicators, as well as the courses. So looking here, we're just going to start on the 4-hour. We know it was a downtrend that we've been in. We can see, I'm going to double click on the chart, and that minimizes the other indicators. We're going to go ahead and delete this Fibonacci. And now what I want to do is I'm going to do 2 fibs here. I'm going to do this option F from the top to there. So we have a golden pocket, which was previous also support on this level and also resistance here. So this is a very good golden pocket to look at to the upside. But what I also want to do is I want to look at the smaller move here, more local. I'm going to close this. And just so you guys know, I like to use quick keys here, so we don't have to use all that. You can use this toolbar, but option, if you're on PC, it's Alt F. And then you click on the chart once, and you can pull down to get your fib. So we have, okay, these are some levels that we have. If we get any sort of relief here to the upside, 43 cents, a golden pocket being about 25 cents. But the thing is, we're getting a bit of downward pressure here. You see this EMA ribbon. This EMA ribbon has been support, and this has now fallen through support, and it's getting rejected. So what I'm actually looking for here is an opportunity for this to bounce. And we can see right here, I'm going to do Option J or Alt J, not the band, but the key code here to get some price action levels. Gives you a horizontal ray, Option J. So we have this level. Look at this. It bounced right at this level, and we have RSI, stochastics, momentum, and Chaikin money flow, bullish divergences right here. So it is looking like we're trying to get some sort of, we got a blue wave. We have the extremists sticking to the outside. And look at this, a bearish divergence right here on the hidden volume. Immediately preceded this drop. So many people overlook this within our indicating stack because they don't understand it, but I'm telling you that the volume is the best indicator in the market, because you can really see. It's like, it's like arguing if a restaurant's popular or not. All you have to do is look at their order volume in the day. Are they having a ton of orders or are they not? If they're not having, if they have one person that eats there daily, that's low volume. If they have, 1,000 people waiting in line, that's a lot of volume. So you're getting a very clear understanding. So when you're coming up into a level and volume starts to diminish, that means you're losing the confidence of that move. And similarly, if and we see that by, for instance, right here. The volume is not agreeing with the price action to the upside. Similarly, right here, when we're getting choppiness, it's there's a lot of indecision in the market right now, but we're getting a bullish followed by a bearish divergence here on the volume. But then we can see we can ignore this bullish divergence on the volume because this is just an attempt at relief, and we did get that. See right where this is, boom, to the upside, and then immediately following that is when we rolled over, when we came up into this sort of price level that is right above it. Which we can see right from all this price action. This was support all the way back to here, and we can see this roll over, and we had the relative extrema, which was sticking on the opposite side of the cloud, which is a slingshot to the downside, coupled with the bearish divergence on the hidden volume. So this is how we're putting these signals together, and we get the relative, and we get a bearish divergence right here as well. And the candle pattern, in addition to that, we have it's kind of like a hanging man doji candle showing reversal. So we're getting a complex concert of bearish signals when we push up to any level that we get rejection at. Now look at this. We have 6, I'm going to double click here. We have 6 bullish divs right here at this level, and it makes sense because we have we have support here, we have previous price action, a lot of previous price action through all this, and we're getting the candles are starting to round, and so there likely could be an impulse to the upside here, which is evident because this was slowing down, as we can see by the extrema already being out at this move, and we get a blue wave showing a local trend floor. We have this push down. Look at this, right at the blue local trend floor, sideways. So what I'm seeing right here is we likely will get at least a sideways action, maybe a little bit of a relief up, maybe to 24 cents, but more likely than not, continuation down. And I'd be looking at this massive downtrend that we have right here, which is kind of confluent also with this basically 22 cent level, and then down to 1970 to the downside. Now, let's do, we said we were going to do Matic, so let's do Matic. And remember, everybody, go over to bitlabacademy.com and sign up for the newsletter right here. Go to the newsletter and get signed up, because you're going to have an opportunity and you're going to get free alpha that I send once a week, as well as you're going to have an opportunity to vote on what's happening, some of the coins that we're covering here on stream. So go and check that out, bitlabacademy.com. We're going to do Matic. Where are you at, Matic? All right. So and I spoke about this the other day. We're going to actually mute the BitLab Market Intelligence. And what we can see here is we had a bit of a descendant. We had a bit of a triangle. We kind of do it from a number of different places. Either way, wherever you draw this from, there was either an ascending channel or an ascending wedge, and either way, that's bearish. And what happens? We pushed up to this level right at this previous price action top, and we roll over as soon as we got there. Boom, and we found a little bit of support here, but immediately broke down. So what we want to do, we already have some levels here that we drew from the bottom to the top. I'm going to move this over so we can see it. There we go. So the levels I'm looking at here are probably, we actually have a bit of a line here because of this support that we found. And as we see the price rolled over out of this, we're getting a little bit of support right here, which is the 382, 38.2% fib pullback. And that's at $1.19. No, sorry, $1.11. It's like, how's it $1.19? We're already below that. $1.11. I'm looking for maybe a little bit of a pause here because we're just breaking through this level here. Maybe a little bit of a retest to the upside, and then probably a continuation, unless this is a fake out, which it very well could be, a continuation down to about the $1.06 mark. So this is sort of a level that I'd be looking at for an entry, and then another entry around the $1.03 and another entry down at the 95 cents. However, I don't think it's going to break down below $1 unless we get a lot of bearishness that's coming out, and unless Bitcoin actually rolls over and goes through that level of support that we're testing right now and breaks down below 19,600 or so, then maybe we'll break down below $1 here. If we go to the upside, I'm looking next target. We need to fight. We're going to have some contention here at $1.31. We're going to have some contention here, and if we get rejected here, then I'm really looking downside. But if we push back up, and this is a fake out to the downside, if this is a fake out to the downside, we push back up and we break $1.35, $1.36. Next target I'd be looking at is about $1.42 because that would be this extension here. So yeah, actually, if it's over here, it's about $1.45. And then next target up from there would be about $1.83. But I'm not looking at this target yet until we clear what's happening. We can't look at what's happening way to the upside until we look at what's happening. Let's go auto. Until we look at what's happening right here, if this gets this in rejection, or if this comes right back up and then rockets to, but this is a key level right here, about the $1.24, $1.25 level is the level that's going to determine whether we're getting rejected to go back down, and that's even if we even get an impulse back up there. So patience is key right now. The data that we looked at today through all these different charts, looking at the broader term and understanding that the Chinese 10-year, and when the liquidity, and think about this, why did I bring this up so much? It's the China's, massive country with among the largest population. I think India, analysts just suggested that India might have a larger population than China now. Either way, but it's massively dwarfs the population of the U.S. with, I think we're around 350 million, whereas China's, in the 1.7 to 2 billion mark, I think. Huge number of people. And when liquidity is coming into their marketplace, and China just opened, and when this liquidity here, the 10-year goes up, it has, look at this, perfectly signaled the trends of Bitcoin. So pay attention to this, and this is a CN 10Y versus DXY. This is how you're looking at this. But that's, that we have to look at this broader data, not just the Dow Jones, not just the Dixie, not just Bitcoin. You need to gather your tools, gather your ingredients, so that you can be a profitable trader over time. And with that, I really appreciate y'all being here. My name's Kelly Kellam. Thank you for being here, part of the community. Like, subscribe, ting that bell. I really appreciate it all. We're building something wonderful here, and I appreciate each and every one of you. I want you all to navigate this market safely and also make money in the process, and really help support your life and your families, and freedom from all this craziness that's happening with the monetary policy and inflation. So with that, make sure you follow bitlabacademy.com and follow all of our socials. I hope you all have a wonderful day. Adios, muchachos. Adios, muchachos. Thank you for coming. Come back to BitLab again. Adios, muchachos. Thank you for coming. Thank you for being my friend.